welcome to my channel. Today's training is just about overlapping. We need to be very conversant with our trading sessions, okay, and what time in the market that seems to have more liquidity and high volatility. At this time where there is more liquidity and high volatility in the market, that is where price movement seems to be very high, and that is where we all think to strategically position our entrance in order to maximize the profits at that given time. So like we know, the trading sessions, some of us may not know, but we have basically 4 trading sessions. We have the Sweden, we have the Tokyo, we have the London time, and the London session, and we also have the New York sessions. You understand? Now the Asians, mostly the Asian related country, they belong to the trading time that trade try to overlap between Sweden and the Tokyo, and this time is between 7 a.m. to about 12 p.m. So we see that the actually moderate movement within this time, okay, and about 12 to 4 p.m. you see the London time, trading time of session overlapping with the New York time. So about this time is 12 to 4. Just take cognizance of this. You see that there is always high movement of prices between 12 to 4 p.m. daily. Why is this so? This time is where there is high liquidity and high volatility, so there is more of trading activity taking place. So I will be just teaching us today strategically how to be positioned in order to maximize profit when it comes to this time. All right, now before us today is gold. All right, let me quickly do this. If you can see this very place my mouse is, okay, you could see that price actually got to this place before. I analyzed this market yesterday and it was really profitable. Now when price got back to this place about this time of overlapping, about the overlapping hour, let me go to 1 hour, then you could see that this very place now at this point, just yesterday, it was 1 p.m. Nigeria time. Now trade got down to 32.95. That's the price volume of gold. The price of gold fell to 32.95 500 or thereabout. Okay, we can even say it's 32.94 now, but price left my box. I boxed it yesterday. Now price left the box and could not fall back. Still at 300, it could not fall back. Immediately we enter the trade about this level. Because why? I noticed that price has gotten to that point before. Price has actually gotten to this level before. On our daily time frame, we can see on our daily time frame that you can see on our daily time frame that when you come to this level now with my horizontal, you could see okay, let me quickly do this. I'm using my cursor to do this right now. Actually expected price to fall below this level. Yes, I truly expected price to fall below this level, okay, but that didn't happen, so I boxed it. This is how I analyze my trade. I go to my bigger time frame, which is day. On my daily time frame, I could see from here there was a massive rejection. From this place, rejection always take place within this level. Rejection is always taking place within this level. But gold has been selling since last week. Gold has been selling, so I was waiting for the best place I could just take a little buy. All right, so I looked at for that overlapping time, which is between London and New York, and it played out, and gold gave about a 300 pips. Among the 300 pips, that is a huge profit. Now, this is also what we're looking at for today's trade. All right, gold is coming back to this level. Gold expects gold to rise back to this level. I'm boxing it again. So if you are actually there watching, to get more details of this recap, subscribe to the channel and you will always get more details. Now, I am foreseeing gold to come back to a minimum of 33.48. Yes, why did I say so? Because at this point, this is where we've seen lots of resistance. This is where we're seeing lots of resistance. So if eventually gold comes back to this level on our bigger time frame, that is only when I would want to, sell back this market. If gold fails to come back to this level, the other place we could be looking at is about, just hold on, don't think about selling, going short yet, because it has to retest. It's going to be retesting, and to confirm that this market will actually retest back this sell, if it's something that will continue selling, okay, going bearish, we want to confirm that with our Fibonacci. We've seen that it was selling, all right, it sold from this level here and came to this level. Now, if with our Fibo here now, which I'll be going back to a smaller time frame for clarity so we can see it's very clear. Now, with our Fibo, we can see that this level meets the same resistance where we could see rejections. Okay, now going back to 4 hours, we're expecting gold to hit even above the 60 level. Gold is likely to hit above that 61 level. Okay, it's currently at the 61 level, so we're expecting gold to come back to the 50 when it will sell from. Okay, we're expecting gold to come back to about, yes, between 50 and 38 zone. Between 50 and 38 zone, this is where we're expecting gold to fall back to. So when this happens, what we should be looking at for, this is what we're looking at for in gold. Gold is coming to this level, all right, and this is what we're looking at for a valid sell of gold. For a valid sell of gold, this is what we should be looking at for. So overlapping takes place at this time. Always look out for overlapping. Look out for your overlapping timing, so you will be more profitable with the trading sessions in the markets with your overlapping. I want to believe that this stuff is clear from this explanation. You could see, why do I have to draw this? Because this is actually how the market swings. We have forecast the market that the market is coming back to between the 50 to 38%, but we wouldn't want to even start going back short until what happens? Until it gives us this swing of what? A higher low and a lower low. So when it happens that it gives us a swing of a higher low and a lower low, and it is now between our 61.8 to 50 or below the 61.8 zone, then we can say that it was valid. That is when you trade with patience. Trading demands your patience. Trading demands some little secrets. And when this thing happens, this movement or the prediction I'm giving happens within the overlapping time, look out for it, and it will not help you to maximize profits, reduce your loss, and have more profit to take away from the market. This is how we trade overlapping. Okay, we don't just trade overlapping that because this time there is a lot of trading activity taking place. No, we also have to put back to test what our trading strategies. Now, if we are to take from this level now, you could see that at this point where I drew my push, at this point where we drew, don't expect gold to actually sell today. Yeah, at this point you could see now that this level here, this level, you could see that this level here, this place where my mouse is, like this level here, okay, you could see it's making the second touch upon the trend line, making it another valid reason why we should go short when this happens. All right, so this is actually my recap for gold, and I'm expecting this to happen. I want you to hit the subscribe button, drop your comments, let us see how the markets could play out as analyze. The market has been, our prediction has been hitting the mark. Whenever we give our prediction, it always hits the mark, because we don't just trade blindly, we wait to see what happens in the market. It's just a simple concept, but always keep happening the way we designed it. Okay, now when you also want to check it out, you will see again what will happen here. I am believing that when all these things happens, nothing stops us from taking the market. Nothing will stop us from taking the market. Why I drew this trend line below here, I'm just showing you an example of a Cantorian kind of trading, okay? Because we bring all those strategies together. We've seen from the bigger picture, this is for us. All right, if gold have to, for any reason, comes back to this level, if gold for any reason will come back to this level, it won't just come back to this level one day. It will take long time, it will take process, it may take like a week. So, but in as much as gold now is where it is right now, in as much as it is where it is right now, we'll be following the market, we'll be trading according to how it is, how the direction is moving, all right? Because if I should zoom in, we can see that this very level was almost giving us what? A head and shoulder. If this happens here, already is a small head. This is the head. This whole level is the head. This is a shoulder, and this is a shoulder. Okay, and this shoulder has been broken. Now we're expecting the shoulder to retest back, give us a higher low and a lower low kind of movement. The retest of that lower low is where the retest of the lower, okay, is where we want to short the market again. All right, and when this happens, eventually we're thinking we'll be making a kind of huge profit to the market, to the downside of about so give or take from 33.44, we're shorting the market back to 300 and as well as 395. That's a huge profit. That is a huge profit, about 500 pips down. So this is how we see the market. Okay, this is how we wait patiently and allow the market come to us. If you're not doing this, if you're not trading this approach, maybe you're just jumping and entering the trade at any time you see the signs without properly analyzing the trade, man, you are losing it. And I tell you, you won't make profit from the market. You're trading by luck, not by skill properly acquired. Okay, you understand right now? So going back to another pair that's actually overlaps within the London time. Okay, now when we take our trade, you will see at this level here, trade try to move up from this level. All right, one of the overlapping time. We take this now to 1 hour. 1 hour, you see on 1 hour, this is USD JPY, US dollar and yen. Okay, this USD and yen. When you look all around to this level, when you look from here, which is 17th of this month, you will see that price has been trying to break below this level, but whenever it comes to this same level, what happens? Whenever price gets back to this level, what happens? It bounces up back. Whenever price gets back to this level, it bounces back. So the overlapping of yesterday took place as about 2 p.m. yesterday. Price just got back to this level without getting down to this last rejection. Immediately, because there was volatility and high liquidity in the market, the price moved up back, started moving up back. You understand? So this time is now the overlapping between the London and the New York time session. That happened and price kept moving. So now we're trying to put this trade. Okay, now this trade has sold about 300 pips. Okay, let's say not exactly 300 pips. Yeah, it has sold. This trade has actually sold. USD JPY has sold 300 pips since 23rd of this month. It has sold 300 pips. So what are we looking at for the market? We're looking for another resistance, likely where the trade will now retreat back, and that high resistance we're seeing is here. Yes, so we think that trade will push about 60 pips from where it is right now. It's giving us 60 to 70 pips before we think about shorting it down again. Our FIBO will help us to also get that retracement. So even before we use our FIB, we can see here, this was where trade stopped. Okay, this is the origin. With our FIB, we will see the resistance here. So expect this guy to keep pushing high to this level, and when it now eventually comes to this level, will eventually hit this point, okay, and show us the swing movement of the higher low, then retest of it, then we should think that it is the valid time to go short again. This is how to trade. I'm trying to break these things down in order not to always be trapped in the market. In order not to always be trapped in the market. Here is actually a gap that needs to be filled. If we see this level now, I can tell you that this particular point is what a gap that needs to be filled, and that gap is actually going to be filled with trade activities. All this level, they are gap. These levels are gap. That's what will be filled, and it will continue pushing up until there is a major resistance based on major previous event that has taken place, which is where I have marked at. You understand? So I've mapped it at that this level will repeat itself again. This level will repeat itself again because the major action took place about here. So I have brought it back to this place that it will have to be back this structure, then give us a sign of a higher low, and the test of the low that will now make a lower low. We can then think of shorting the market, but this gap will definitely be filled up. This gap will eventually be filled up. So alongside waiting on the day this will happen, we now look at for the what overlapping time. Overlapping between London time and New York time is very significant. It's important, and it takes place between 12 p.m. to about 4 p.m. daily. Put this at your mind, and it will really guide you, to help you to stay guided in the market, to make good profits from the market. All right, so do well to subscribe and give us your comments. Your comment is more important to us. Your comment is more important to us. It will really help channel our energy in the kind of content we should be providing. Trust me, this analysis will play out. Thank you. Till we meet again.